Morning.
How are you this morning?
Good, thank you. Sorry, I was just getting rid of my husband's cell phone because the ring is so loud. How's everybody this morning?
Doing fine, thank you. Thank you, sir.
Morning, Grant.
Good morning, peeps. Morning. Wasn't sure I was going to make this morning's one. I had another meeting scheduled that it's now, I've just been told it's not happening. So I'm very happy to be able to join this morning.
Fantastic, Uncle Grant.
Patty, hi, Marguerite. Hi, Johan. Nice to see you all.
Hi, Robin.
I'm just going to... Just want to get this one going for us. Morning, everybody. It's like always, very nice to have you all here. And then I want to get this one going and do a screen share for us, then we should be fine. So this morning I would like us to have a nice conversation around Engager. Last month we started off looking at the different profiles as such. However, I just want to touch on biases before we get into the profiling as such, because there was which just got me thinking again, was there was over the weekend Morningstar, actually last week, Morningstar released a piece of research that they've done around biases as such, and our report does give us also our clients' two main biases. And it was interesting for me just reflecting on the impact of biases, because for some time we in the last Friday of the month financial coaching circle earlier this year, we were also still looking at biases as such and the impact of that in terms of our clients' behavior. However, the thing that I was pondering on was, what is the impact of biases further than, because normally we think of biases regarding how our clients will react in terms of single premium investments and investing as such. However, if we look at the greater work that was done around behavioral science, and then we see that biases actually influence all our decisions. What Kahneman said, thinking fast and slow. So we'll tend to go with that. That's natural for us, and our biases is actually that natural thing that that comes up for us. So we'll most probably divert to biases as such. So I just took out of one of the reports just a summary of one of them. In this case, it states that your behavioral biases, these biases would get in the way of wise decision making. Your advisor will discuss strategies to help you manage your instincts in your financial plan. And then fear of regret, resistant to in case will miss out on a potential gain from the next best thing. And then instinctive and adversity tends to make decisions quickly and emotionally based on instinct. So that's just out of one of the reports. If we then go and look at more helicopter view of FDNA, it then lists 16 different behavioral biases as such, which impacts our clients as such. The Morningstar report then specifically, there's two which refers specifically to or that we can map directly. Actually, there's three: the creativity bias, the overconfidence bias, and then there's the risk-taking bias that I did not highlight here. So, but what was interesting, if we look at overconfidence bias, there was a direct correlation when they looked at clients' financial wellness. And what was the interesting part was that these clients, although they're very confident to invest, the overconfidence led to them actually making wrong financial decisions, always thinking that they can now spend money on something that's more a lifestyle asset than a retirement asset. And also these clients then had less provision for long-term goals like retirement, and the clients also had higher balances on their credit cards and short-term debt than clients which did not have overconfidence bias. So clearly showing us that biases do not only influence our clients' decision-making in terms of how they will look at investments, because overconfidence in a context, if we just stay with that one, overconfidence will show that clients will most probably, if they had one success in terms of, say, buying into cryptocurrencies, they'll keep on investing, although they then can have subsequent losses. The confidence that they gain from one win will keep them on going and making or investing and making wrong decisions in terms of that, due to the overconfidence that they got from a specific investment. So at this point in time, I just perhaps want to stop the share, and I think it's worthwhile if we just, what comes up for you thinking of biases as such, and how do you currently use it in terms of looking at the report, perhaps?
So maybe Hendrik, I can comment. So I'm not directly in the advice space. I haven't looked at too many of the reports. I'm just quite excited about the insights that these reports create for us, and I love sort of understanding a bit more about how people think and behave. I guess my view with this sort of stuff is it's interesting for me how it relates to different people's personalities. And how it feeds into things like the Insights program and your social styles, whether you're analytical or drive or expressive, or because you naturally find your risk takers, your entrepreneurial kind of people. I often envy that, because I'm not. I'm quite a conservative risk avoider, and quite thoughtful about these things. So it's always interesting to think about, what am I giving up, and is it worth it? Given my conservative, I need the facts and checks and that sort of stuff. So when I hear a story about the risk takers over time, there's evidence that they may be worse off in terms of their retirement planning. It actually makes me, that maybe is a bias of mine, because now, cool, here's some evidence that I'm maybe doing the right thing. So so that's just a comment from my side. I think that sort of research that then can link back to those different styles will enable a financial advisor to have the discussion with those people, to identify the kinds of people they're dealing with, and then to objectively assist in managing those emotions and managing those biases. For me, an anchoring one has always been one that's very relevant, because people, the whole historic return thing is always a relevant one when it comes to investing, because people are always chasing, what's the best fund? What fund is returning the best? Over 3 years, 5 years, 10 years, whatever. Okay, well, that must be a good fund, so I'm going to invest there. And it's those sorts of things that you then need to engage with your client in an objective way, but that doesn't only appeal to the head. That's again one of my own personal biases, because I'm intellectual or analytical, and I do the logic discussion. And everybody says, oh no, that's logical, but you've got to. Most people are driven by emotion, right? So you've got to convert that into something that connects with that person emotionally.
Yeah, and I think what comes up for me, Grant, is how do you leverage that strength? You know, because in Afrikaans we say it's a vooroordeel. You know, which you know, so that's your bias, but most probably or not most probably, there's also some good things in that bias that you can use to your benefit. You know, but be aware where it does not serve you. You know, so I think that's the other thing that comes up for me. So yeah. Any other thoughts from the advisors that you perhaps playing with this at this point in time? Marguerite, there from yourself and Mark and Konrad, I would love to hear your views.
Hendrik, I think you summarized it well by saying the fact that it alerts you to what your biases could possibly be. I found it helpful in my own life, and I've seen it in clients where they've become aware that this is my habitual pattern or way of looking at things. And just having that awareness enables us to take a pause and say, but is it serving me now? So yeah, I think very much the awareness around it helps a lot.
Yeah. Thanks for that, Mark.
Because my understanding of a bias is it's technically something that you could be doing almost subconsciously. So unless you've been through an exercise like this, or you've worked with a financial planner who's going to make you aware of them, you probably may not even be aware. And then as a financial planner, how do you have that conversation with the client? Because it can't be a simple, easy one. They have to start admitting that there's certain behavior that they're not aware of, that they need to work with, right?
Well, I think the best way to work with that, with a bias, is to have the actual facts in front of you, and not trying to convince the client to do what you tell him to do. So if you can prove his bias wrong by proving in facts, putting facts in front of him, I think that's the way I would handle it.
Thanks, Johan.
Morning, everybody.
Yes.
Nice to meet you all. If I could jump in and say, I started using this A because of a study group that I'm part of, but B because I've got a situation where I have a lot of older clients who've been referred from an accountant who's also, how can I put it politely, of a similar generation to them. So his biases are affecting their biases, so I'm like facing a double bias kind of thing. You know, so it's like he has viewpoints on guarantees from banks, and you know, and it's and so to be able to go back. So sorry, long story short, in my interaction with these clients from a fresh perspective, I didn't see what he was seeing, but the vested relationship was with him. You know, I'm the Johnny come lately, whereas this, and in the one instance, he's been their accountant for 30 years. So. But being an accountant, you know, to be able to go back with some actual science and say, no, this is what I perceive. This is what the survey is saying. It's given me the what's the right word? He's started to listen because he's realized, well, gosh, you know, maybe I have been. So, yeah, awesome.
Yeah. Fantastic, and thanks for sharing that, Mark. I think that's so valuable, you know, and I think that's a beautiful way of also to Robin's question. Now you handled it is to say, you know, I'm curious. You know, the report says this. Can you think of times when you did this in your past? You know, that the client actually, like in this case, especially somebody technical and analytical as an accountant, can then say, okay, but if I think about this, most probably it is influencing me like this and this in my life, you know, so the awareness actually comes, you know, we're not judging. So the client is left with thinking about it, you know, so yeah, that's something that came up for me, Mark.
And if I can add something with the recent riots and nonsense we had here, I actually found how can I put it? People revert to character, you know, when the chips are down. It's amazing how accurate the report has been. So I suppose when people are put under stress, they go back to what's the real them, not the pretension or the image presented. So I don't want to be sitting at a road at 3 o'clock in the morning ever again, but it's been insightful.
Yeah. Yeah, and I think that's a beautiful example of exactly what the report, like you highlighted it. The report speaks to in our innate behavior, our born behavior, our natural behavior, and not the learned behavior. That sometimes we learn strategies to compensate for that, but if we in a corner, then we most probably will go back to our natural biases, as well as our innate personality will come out, and it's then important to understand through being aware of it. And that's most probably, I think, the biggest role and research shows that that's the biggest value we as financial advisors and coaches can add to our clients. But then our clients needs to engage with us. They mustn't go and, withdraw from the investments or take out an investment online or, start buying cryptocurrencies without taking us into consideration in the process. And I think that's where the report gives us a nice document of conversation, so that we can explore this.
So please excuse me for 2 minutes. There's someone banging at my gate. I'll be right back.
100%. Koenraad, perhaps a view there from your side.
Morning. So it's not Koenraad Jr., it's Koenraad Senior, his father, talking now at this moment.
Okay, fantastic. So nice to meet.
Nice to meet you. I must get him online. I just want to mention one thing. I'm just the first time I met you. I don't know what it's all about, but in my 30 years or 40 years of experience in this industry, I've been in a fertilizers company previously when I talked to a lot of farmers. But I've got two very distincting things that stand out over this many years. And I've got financial, if you look at people, there are basically, for me, two sort of people in this financial industry over the 30 years. The one is an aggressive investor. And the other one is a very conservative investor. There's not an in-between, because the aggressive one, he's telling you what he wants, and if you fall for it, you're gonna end up with a big problem, because he called himself aggressive, but when he loses 1 cent, he get aggressive with you. That is what happened. He get very aggressive, and he want to, the conservative, he when he loses or your money doesn't grow, whatever his expectations out of a conservative thing is, he want to take out that. He said, no, man, you're lying to me. That thing is not growing the way you said it would. I said, yes, but we were deciding that we are conservative. He said, no, this is a hopeless story. The money is not growing. Take it away. So I'm just mentioning, I'm coming in from nowhere. I don't know what it's all about. I'm just listening about this biases, and I'll get later on. I'll get well educated with you, but at this moment, I'm just mentioning two things to say that Koenraad Jr. is not on the moment here.
That's fine. So I'll say Oom Koen then in the future. So that's fine.
Or Senior or Oom Koen or whatever.
That's fine. So I just want to go back to screen share that we get to the engager. I think it will be worthwhile, after we've worked through the different profiles, also to explore a little bit, what is perhaps some of the financial behaviors, because I think that's what Johan also referred is what is some of those financial behaviors we can see. For instance, this because this was triggered by this Morningstar research, somebody of overconfidence, if we then see that, we see a low score in terms of how do the person manage their money, so budget, etc. And we see a low financial EQ, then most probably, definitely, that's the indication that this is a high risk for the client, and we need to have a further conversation. So I think it can be worthwhile if we, in a future session or two, also unpack the biases and see what is some of that financial behavior we can actually see if we look, because a lot of research has been done around what brings financial satisfaction to clients, and then actually map that back to say, if we see this bias, what is then the questions we can ask a client, and what is some of the behavioral indicators that we can look for. So yeah, that just as a side point. So again, we last month also stood still by this, but in the meantime, I actually, for me, this was one of those pennies that dropped through during the month. Is if we look at our reports, the core strengths that those 2 core strengths that come out on the report comes from the 60 or from the 8 scales or the 8 behavioral drivers. However, the first 5 of them refers to in terms of the behavioral drivers. So if you look at the 5-page report, that will be that first part, which then talks to how will a client look at thing is, what is important for the client? How will the client engage in terms of with you as an advisor? How do the client prefer to engage with you in terms of communication, etc.? And so we can either have then, so based on that, on the strongest of the 8, actually 16. So on the scale, for instance, if commanding and taking charge is scored the highest, then that will be the one strength of the client. And let's say together with that, taking charge will most probably, let's say, specifically with the engager, you can have somebody that's taking charge and spontaneous, so like to engage with people, also unfocused, a little bit all over the place, will then be your 2 strongest drivers. And that is then how the report determines what is the strengths of the client as such. The second 3 drivers is then specifically how our client will engage. If you then look at any one of the 3 reports, will be how the client will engage in terms of looking at how they manage and invest their money. So somebody that's pioneering will be more goal orientated and ambitions. Somebody that's more content will be more satisfied, more orientated to lifestyle. Easygoing will also be the person that's not going to hassle you too much if the portfolio over the short term is not performing that great. Where somebody with a higher pioneer score will be the person that's going to hassle you more in terms of if there's non-performance. Then to what Koen said, risk will determine on the one side, daring, courageous, overconfident, where cautious will be people that's calculated, conservative, need certainty in terms of how they look at the investments. Where the third component is then, and that's where if you think about designing solutions, which will most probably come out here, or having conversations about clients, if there's because in a lot of cases we end up, we actually normally have got 2 types of clients. The clients that's got too much money and they're not actually living a life and using the money, and then the other clients that want to live a great life but they haven't got enough. So yeah, if somebody is creative, one will most probably be they will be more open for us to come up with and do brainstorming with them, vision boards, abstract ideas of how they can start perhaps a side hustle and add additional money to their cash flow, where if they've got a low score in terms of creativity, the more conservative people most probably, you will, if it's somebody that's cautious as well as anchored, you'll most probably look at more guaranteed products. More conservative portfolios will have to show the client that the products delivered in the past on a consistent basis. Most probably more balanced portfolios that balanced to conservative portfolios. So these three is then important if we look at the reports around how we'll structure solutions, where the first 5, if a client depending on where they sit on the continuum, will then, talk to us, what is the things that's important for the client? How does the client communication style work, etc. So perhaps just stop here. Any questions perhaps from you as you were working with the reports as such around these?
If I can jump in and say it's early days for me, but the interesting thing is what I did when the very first one I did was on myself. So please excuse me, I've got dog. I'm back, I think.
No, that's fine, don't worry.
And it's interesting. I came back as a community builder, and it was funny how I realized not only that I have to take into account the client's profile, but mine as well, because I realized, especially after the last 18 months, I was maybe sort of pushing a little bit of myself through, like we all do, So yeah, that's what I want to say.
Fantastic. I think that's so critical, Mark. So if we then go and have a look a little bit at the engager, engager, then if we look at that traits that we just looked at, will generally be more or less on the fence in terms of taking charge and being cooperative. So they will be able to, take up leadership in some situations, and in other situations, they'll then be comfortable just to take the back seat. They're more outgoing. They are fast-paced, so things must happen faster. They'll also more, sorry for that, I just want to move back there. They're also more spontaneous, so at the meeting, when we still had face-to-face gatherings, that's the people that will mingle with the rest of the people, and not like me, most probably standing more in the corner or talking to people that I know best. And they are more trusting, so they would not, if you come with a solution, they'll be comfortable to take, in most cases, what you are offering them, and not ask too many questions and being skeptical and ask for, I want proof, etc. So that's a high level engager. If we then go and look nearly and map that on, if we take the money EQ, we can basically also, like social styles, for a lot of us grew up with that, divide the people into four groups, and for engagers. And Mark, it's interesting, that you're a community builder, so you are compared to engager a little bit, you'll move a little bit more careful, but the relationships is also very important for you, and will spend more time, understanding people, etc. So, but you fall into that quadrant of being comfortable and spontaneous. For them, high level, it's they concerned about their lifestyle. balanced lifestyle, most probably would like to spend some money on funding lifestyle assets also, and then getting recognition and being recognized in the world as such. So that's important for engagers and community builders specifically. And yeah, Mark, please jump in, because I think it's nice, due to the fact that you fall into that quadrant. You're now not an engager as such, but you can say, does that speak? Perhaps the question is from my side, does that speak to you? Do you feel, if you think also, you just started using it, but is that perhaps stuff that's important for you as an individual?
Yes, absolutely. It's kind of spooky almost, especially when you look back and over the last 18 months or so, and particularly the last few months. I suppose I wouldn't have been worried about things and going down barriers and stuff if I wasn't a community builder, probably,
Yeah.
And also it's just, I just feel like I've scratched the surface, that I think that at the moment, I'm also getting a lot of value from when the clients engage to do this, when I send them that link. It's something that nobody seems to have asked them before,
Yeah.
So the part that I'm finding the most challenging is not the right word, but it's how much of that I share with them, the insights that it gives me, as opposed to, almost preempting them, if you know what I'm saying, because I'm getting insights that are confirming or countering things that I might have sort of intuitively perceived. And it's to use this effectively as a tool to help coach them in the right direction. It's, I'll let you know how it goes, but it's they say knowledge is power, and I remember when I looked at the first one that was sort of genuinely a client, you sort of go like, whoa, how did I miss that? Or I've never perceived that, or to the other extent it was like, this is so Tanya, she's an engager. So I'll let you know how it goes. Ask me again in a month.
Yeah, no, fantastic. But I think what you're saying, what I'm also experiencing, because I'm not. It's only from December that I started working with Robin and Duncan and them, and starting using the report. But what I find is most probably, it becomes part of your client engagement strategy, and you won't use everything in the first session, but it gives you such a richer conversation you can have with your clients over time, and you can add so much more value, because you can move from the product and how's it going with the kids, etc. That's still important conversations. However, you can now link it to this, because now you understand the values of the client, you understand what is important for the client, but you also start understanding what is some of the stuff that could stand in their way of building wealth. So I think that's what I'm taking out of this, So
well, to lead on from what you said yesterday morning with regards to the financial anxiety going through to financial wonder, there's a lot of anxiety at the moment. It's my client base are sort of middle income, lower high income. I don't have many high net worth clients. A lot of my clients are self-employed. They've got their own businesses, and they've suffered hugely. They're in tourism or conferencing, that sort of stuff. So it's to have the knowledge to help them realize how they're looking at things, and it's hugely powerful. I just wish there was more time in the day. On the one hand, I'd love more clients. On the other hand, I'd prefer fewer clients so that I can actually delve into this even more, because it's absolutely mind blowing what you actually And sometimes it's so obvious that, you know, it's almost in front of your nose, but you just didn't quite click it because the other thing I've also found is spouses, you know, the divergence you can have in spouses is quite surprising. And you sort of have tended to be I wouldn't say orientated towards more the one than the other, but yeah, sometimes that dichotomy in terms of how they view things, you've not factored in properly, you know, just because you've never really looked deeper, you know, because so often when you're talking to them and you say something and, you know, so the one nods ahead, so the other one nods ahead, but is he or she really nodding their head because they agree, or just because, you know, they want to appease or keep the process going? It's, yeah, the human brain is
fascinating.
Now I know why I never became a psychologist.
Yeah, I think one starts, you know, my experiences in terms of debriefing husband and wives or partners or if they just cohabit, I've had different scenarios. Is what I find is that they'll start actually saying, wow, that's why. I think here's now a good example. For instance, on the screen, we've now got, you know, on the one side, initiator strategists, which I now know Grant is a strategist, if I remember correctly. You know, it's important to address my goals, address my risks, and protect me against declines. Where, you know, on the other side, if I now have to advise you, Mark, is then, you know, for you it's important that the language is, you know, addressing your lifestyle, making the plan flexible, and you know, most probably I won't use language of for engagers and community builders. I won't talk about a budget. We'll say, okay, how do we craft a spending plan that fits into your income and expenses, you know, that serves you. So, and if for instance, now in Mark's case, he's got a spouse that is a strategist or initiator, then, you know, yeah, a budget will be managed up to the cent, where on this side, Mark wants to spend on, you know, having a great life. So that will definitely cause conflict within a marriage and within a system. So, so I think there's great insights we can take from here, but it's also then important, if we want to get our client to adopt the plan we're offering, is, you know, we need to speak in the language which is important for our clients.
Yes. It's like interesting. My oldest daughter, she came back a reflective thinker, and if you look at the table, it's almost like diametrically opposite to me. You know, yeah, it's mind blowing.
Yeah, and reflective thinkers and stylish thinkers, they you know, is I need a budget to achieve my strategy, where is I need to manage every cent. You know, so will be
100%
close to being stingy. You know, so they'll manage. You know, that's those people that, you know, I just look at and wonder, you know, how the heck do they get everything done that they get done with the money they've got? You know, they just work wonders with money, you know. So yeah.
I've got 3 daughters, and I always, before I did any of this, I always used to say, the funny thing with the 3 of them was that if you gave them each 100 Rand on a Friday and then asked them on a Sunday afternoon how much they had left, you know, my oldest, she would still have, like, you know, a 97 Rand 50. My youngest would have, like, you know, 123.50, because she, you know, moved and grooved and swapped. She's into this K-pop and whatever, and she'd swap this, and so she turned a profit. And then my third daughter, you know, would have like 7 Rand 50. Because, you know, within 5 minutes of me giving her the money, she had to pay back the 50 Rand she loaned from the other sister. And I'm being humorous, but it's just, it's amazing, you know.
Yeah.
So, you know.
So this one is just giving us a high level view, is, you know, what in general, somebody that's an engager or community builder, if we're engaging with the other styles, we'll most probably have to tighten up a little bit. If we engage with somebody that's in our own quadrant, it's fine. Last month we looked at the strategist. Actually, we looked at the initiator, but that's that block. They need to tend to, be a little, just take it a little bit lighter when engaging with the other style. So that's just adopting. How do I adopt to an opposite style? So yeah. Then we touched on then the biases, but specifically then for the engagers and community builders, is the biases that comes natural for them, and there will be two of them depending on your strengths. That will be the normal one is some people here will say leave the world as it is. I do not want any change. Other people in this group will be instinctive, and they'll most probably just go with their gut, which in a lot of cases works, and in other cases, it's especially with finance, is not always the best way to go. First, get some facts. Yeah, you'll also get most probably more of your people that would want to explore new things like cryptocurrency, perhaps trading, new products that comes into the market, etc. And if it's working, they would not necessarily just jump in, but they'll most probably be a head follower. If some of their friends or other people they hear are having success with something, they'll want to go that way. And then, like we said, spending plans rather than budgeting, because there could be, I want to have the best life possible now. So that's important for them. So that will influence their way of looking and making financial decisions. Then if things goes off, like Mark said, the past events over the past few months, where for strategists, where initiators, we looked last month, they're concerned about not achieving their goals, losing control, having their time wasted, where for Mark, engagers and community builders is, I'm concerned about losing my lifestyle, and I don't put me in a space where I'm going to lose face, because that is for me terrible if that's going to happen with me. So yeah, so that high level, if we look at what is important, and then how do we then communicate to community builders is, don't worry, we'll get through this crisis, and you'll still be able, you find in terms of your lifestyle, and what protection do we put in place so that you can maintain good faith with your family, that you do not lose face in terms of how you think and how you live, that you do not lose face with your friends. So how do we manage that so that we can protect what is important for you, lifestyle, and I think then the important distinction for engagers and community builders is, how do you plan for the future? Because for engagers and community builders, having a great lifestyle now and living the best life now is very important. However, the distinction is, how do we plan for you that you can live this same lifestyle also somewhere in the future in your life when you want to retire? So how do we help you to become financially independent, that you can not only enjoy a great lifestyle now, but also in the future? And that's a great distinction, I find, for engagers and community builders, to get that move to thinking long term. So perhaps high-level thoughts, and I'm going to stop the screen share so for 4 minutes, because there's one slide that I still want us to just talk through around specifically then engagers. How do we engage with them? That summarize this more specifically, but what came up for you? Perhaps Grant, what thoughts came up for you?
So first, I was wondering how you figured out that I'm a strategist. Did Robin give you like the inside track there?
No, I just thought that should be.
Well done. So you understand this. So that was a test, right? You understand these reports quite well, it seems to me, Hendrik. Yeah, I mean, I was just looking at, now obviously you guys did strategist the last time, which I obviously missed. So some of the things there for me were relevant, but unconsciously myself, and I guess sort of coaching myself to actually be less like that. So understand that I'm like that, and then try and adapt. So lifestyle balance, for example, I see it was on the other side, which is not on my side. And that for me is important. And maybe it's a change over the last 2 years with all the drama we've been going through, but it's stuff that you now can consciously start working towards a balance, even though it's not your natural style. So I hear what Mark says, when the chips are down, when the rubber meets the road, you default back to your core. But I think that's cool as long as you understand that and you understand what the downside of that is. So that you can apply some behavioral tweaks from a financial planning perspective or investment philosophy perspective, and adapt to that, and not be overly rigid. And I think that's one of my. So you talk about a budget to the cent. I don't do that. I've got a budget, but I allow this perfectionism thing is something I've worked on for years. And that's me personally. But I think you can take these principles into your engagements with clients, use the insights that this is providing you, and have those discussions. And say it's not necessary to be a perfectionist. It's not necessary to go to the cent. It's not necessary to worry about losing money in the short term if you're in an aggressive investment strategy. So yeah, those are my thoughts. So I think it's good insights. But it also allows you to understand what you need to be doing to balance things a bit better.
Yeah, and I think what you're saying is again a great understanding, because the report gives you your natural behavior. However, you could have learned there could be learned behavior, and I think that's then important to understand if you engage with your client, as well as you'll then is what behavior do you see from your client, and then if you see the behavior is not congruent. For instance, the other day I facilitated the session with a financial advisor, which he asked me to facilitate for. The client said, the one thing that I do not agree in the report, because we normally start, what do you agree, don't agree in the report. The one thing I don't agree is that I do not want to make use of a financial planner. Okay, that's fine. However, halfway through the discussion, the client said, I took out an online tax-free investment with Investec, and they draw the wrong premium, etc., etc. And then further down, I was talking to this other guy about 12J investments, so we could get back and say, okay, you initially said you do not want to deal with an advisor, but do you see now that you want to talk to an advisor? So you want a human being to talk to, but you love to make your own decisions and do your own research, etc. This is what the report is actually telling you, and I actually see if I look at all these things I'm doing, I'm actually managing my finances in total. So what was then great, the financial planner could say, okay, but I'm here just to help you facilitate this, help you sort out things that things doesn't happen like with Investec, that the debit order is collected wrongfully, etc., etc. However, you can be totally in control. So in future, rather discuss these things with me, because I can do all these things for you. So I don't want you to stop to do this. Do your research, whatever, but then engage with me, that we make sure that we give you the best options, so yeah.
If I could jump in and say, the thing that struck me the most is, I've been in this industry now for, 30 some odd years, 31 years. And I remember back in the day, from a long time ago, we've been on these courses about personality styles, and what your main and your sub one is, and especially in the marketing industry, it was about, sort of the closer you could be to the middle, the better it was, because then you could interact with more well, the different personality styles and things like that. And at the end of the day, that's very hard. Some people are naturally able to, morph or be flexible. Some people less so. What I like about this is that it gives you, more substance to the theory. And I'm finding that great.
Yeah. No, thanks for sharing that. Any other thoughts from the other people on the call that when I was talking through the Engager and Community Builder specifically? And you'll find some influencers also most probably leaning more towards Engager and Community Builder. Although they're more fast-paced, you'll find more of them leaning to being more spontaneous and more spontaneous specifically.
I find your example of, I don't want to use an advisor, with my one client, wife, Mona Ward. She's like that. She wants to do everything herself. And it took me nearly 3 months now to start taking over their short-term insurance and to do things for them that she normally did. But she's always still a little bit of in my face about certain things, etc. But she's now realizing that she can't do anything herself. And the most important thing is when I speak to her to say, I don't want to cut you out, because it's important that you are part of your own plan, of your own business, of your own decisions you got to make. But allow people to help you to create more time so that you can spend that on something else, which is also important for you. And it's not overnight. It's a process. I think it's still going to take a few months to get her to that point where she can trust that you can actually help her with a lot.
No, that's so true.
I think a lot of people have got this impression that it's all about sales, or that's been their experience in the past. And when you start engaging with them at a higher level, where they actually see there's an interest in me, you want to know about me. You're not even talking, we've met and you've not even talked about a product or anything like that. It starts to build that relationship because, I've had it thrown in my face. Now you guys are all just about earning money and moving on, and so when you have the tools like this to show that you're actually, above that, it's phenomenal.
I think that's so true, Mark. So high-level summary then in terms of engagers, and I'm not going, we touched on a lot of it, but perhaps the blue blocks I just want to touch on if we then engage with these clients. Perhaps under the performance environment, let's just touch on that is remember they need to engage, be publicly recognized and free from details, invest time in building the relationship, use summaries, bullets, key points, resist the temptation to prematurely edit their ideas, because their ideas is very important, and then accept and encourage their thinking out loud. So help them to I think it's because they're actually going to build their own plans, and you don't have to sell anything to them. You must just encourage them and guide them that they go the right way. So that's the easy thing with working with engagers. Then
Hendrik, we want no bullets, please just say pointers.
That's it, just pointers. That's the right one. I love that. Because like bullets on a PowerPoint also, one of the people say, you don't want to kill somebody. So yeah. The challenge, how do you challenge them? Encourage them to focus on one goal at a time, because due to their personalities, they tend to sometimes be all over. And then help them maximize their potential, because like all human beings, they just want a better life. So, and help them to achieve their objectives. In terms of products, excitement, innovation, and above average results that will help them reach their lifestyle goals. What do they want in terms of mentoring? They expect friendly relationships to be established, prefer all the research and paperwork to be taken care of, appreciate their goals and help structure their affairs to achieve them. In terms of fears, loss of respect and embarrassment, which we touched on, having to settle for a lifestyle less than their goals. That's very painful. The decision-making style may waver between emotional and rational decision-making, and may make decisions before fully understanding risk and panic later. And that's also due to, especially if you get a engager or community builder that's also high on trust, they'll go with you and then afterwards say, gee, was this the right decision? And what alienates them in terms of the relationship is being forced to read detailed information or performance through thorough research, being persuaded to lower their goals and products that do not live up to their mentor's claims. So that are the stuff that put your relationship. Yes, Grant.
Sorry, man, I can't see your screen. I think this is me, but I'm not sure if you're sharing that slide.
Oh, sorry. Thanks for
not just you.
Fantastic. I don't know.
He likes keeping everything to himself.
Said something.
Okay, there's it. So yeah, perhaps thoughts on that. You know, does that, Mark? Does that speak to you? Does that sounds like you know, if your financial advisor takes that into consideration, that you will be comfortable?
I love when I start talking and I'm muted. I think that's my wife's ideal. Mute. It's funny because my wife came back as a community builder as well. So I always assumed, oh, okay, that explains why she's always been able to get it. But yeah, 100%. Look, I think you're right. At the end of the day, no template is and I don't use the word template as such, but nothing is 100% black and white, because we're all, you know, I mean, it's give 3 people the same cake recipe and the cake's going to taste different all 3 ways. You know, so certainly no 3 community builders are going to be exactly the same, because we all have those little nature nurture issues. But fundamentally, yes. Wow. You know, it's almost spooky sometimes when you look at it, and it's almost like somebody's boiled down your essence into a slide. So.
Yeah. And I think what you're saying there, what is important is, if we look at the reports, and that is the nuance, is yes, 2 initiators that I took here, is what is that core drivers. In this case, it's outgoing and spontaneous, where the other one is spontaneous and pioneering. So the person that's spontaneous and pioneering will be sets direction, be more ambitious, will be more committed to goals, where the person that's outgoing and on spontaneous, they will be more free flowing, and you'll have to, you know, push a little bit more to get the goals out of them, etc. And I think that's the template gives you a high level nuance, where the report, and I think that's one of the things that I love about FDNA or Money EQ, is that this nuance, yeah, actually gives you that, you know, that will make 2 community builders looking different at things, you know. So yeah, so that perhaps my last thought. And then from my side, thank you very much. And perhaps a last thought, if somebody still wants to share something, I don't. My next meeting is with Robin, so I don't in the moment need to run to a next meeting. So yeah, so we can
Hendrik,
close off. Yes.
Sorry dat ek interfereer. Ek wil net sê dit was my baie insiggewend. Ou het nooit te oud om te leer nie, en ek sal met 'n tydjie bykom met hierdie ding. Baie dankie hoor.
Dis reg so om kon. Dankie en goed gaan daarso.
I just want to say from my side, I think what's insightful from this is, when I was looking at the last slide, what people express on the outside is sometimes not what's going on the inside.
Yeah, I think, and that's that old iceberg thing, you know, and I saw it so many times that I've end up with assumptions about people, because I took some people through this that I know for years, And, you know, there were certain cases that I thought this report, I'm going to get fried by the person. Then when we start talking about them, about it, they say, no, but that's so true. And what was interesting in one discussion, thanks, Marguerite, in one discussion was what was interesting was the client actually said, the learned behavior I've learned over time was actually to cope. So I actually want more of my natural behavior back, because that natural behavior in his case was more having fun, having a better lifestyle, etc. And the report actually reminded him of that part of him that he's actually longing for. So that was the counter that I already found for, you know, through these engagements.
Well, that old adage, you know what that old adage about assumption, eh?
Yeah.
Assumption makes an ass of you and me.
Yeah.
Please will you excuse me too? I have a suspicion Marguerite and I are off to the same meeting. So
yeah. Okay, fantastic. Enjoy and all of
see
the
you guys
best.
next month. Nice
See you next
all.
month. Thanks.
Just guys.
Yes,
Nice
all of
meeting
the
you all.
best.
Bye.
Bye.
Stay safe, everybody.
Thanks.